Good day, America. Here on the 250th anniversary year of our nation, we still look at the flashing red and green numbers on our screens most days, wondering which way the wind is blowing financially. We watch the Dow, we watch the NASDAQ, and we look at the price of an ounce of gold or silver and try to guess what tomorrow holds. Well, we're going to get into the nitty-gritty of the stock markets and exactly what's happening in the gold and silver vaults in just a few moments. But first, we like to look at the global chessboard because the markets don't move in a vacuum. They react to the heartbeat of the world, and right now the heartbeat is racing. According to Reuters, the biggest anchor dragging on investors' confidence early this week was the sudden escalation in naval drills in the South China Sea, coupled with renewed anxieties over shipping lanes in the Middle East. For days, the market was holding its breath. When the world freezes in uncertainty, money tends to do the same, or it hides, of course. But then the wind shifted. According to Bloomberg, the midweek diplomatic briefings hinted at a surprise cooling of rhetoric, and suddenly the fear premium that had propped up crude oil prices evaporated. Energy costs took a step back, and to a stock market that has been suffocating under inflation worries, that drop in oil was like a fresh breath of oxygen. According to CNBC, the single sigh of relief sent the S&P on a furious tear, clawing back nearly all of its losses from the previous week. It turns out Wall Street wasn't reacting to a sudden perfect economy. It was celebrating a return to predictability. But while the stock market was throwing a party, the quiet money, the stuff you and I love, was doing something very different. Usually, when stock soars, gold and silver take a back seat. Not this time. According to Kitco Metals data, gold has refused to give up its ground and it's stubbornly holding its territory near all-time highs. Why is that? Well, Financial Times say that it's because central banks across Asia and Europe are still buying physical gold at a pace we haven't seen in decades. They aren't looking at this week's headlines, they're looking at the global debt clock. And according to the Silver Institute's latest annual report, silver is facing its sixth consecutive year of a structural supply deficit. We are simply using more silver in solar panels, electronics, and AI data centers that the world is pulling out of the ground. So while the day-to-day news drives the stock market up and down like a roller coaster, the fundamental lack of physical metal is putting a permanent floor under gold and silver. So what's the reasonable conclusion for these days ahead? According to market analysts at JP Morgan, we are entering a dual-track reality. The stock market is betting on human ingenuity, technology, and the hope that conflict will yield to commerce. But the metals are betting on the reality that when paper money is printed faster than the eye can see, tangible assets are the ultimate anchor. In a moment, we're going to dive deep into the specific numbers, the percentage moves, and exactly what the Federal Reserve's next move means for your pocketbook. But for now, you know the global forces are driving the machine. The headlines write the script, but the markets tend to decode the truth. So stand by for the numbers as we dive into the exchange. And here we are. Dow Jones is where we start over here. As you can see, we're at 51,032. That's up 363 points or 0.72% on the week. And yes, yesterday was an all-time high, as you can see with this roller coaster here. Not to be outdone, S&P 7580 up 16 points or 0.22%, all-time high as well. And what do you know? The NASDAQ decided to join in the fun, 26,972, up 55 points or 0.20, and yesterday was an all-time high. So all three markets sitting at an all-time high. And here's another reason why gold and silver aren't necessarily just flying off the shelf in a wartime. This right here, this red line, is the strength of the U.S. dollar. And as you can see, the yen is tanking, and the U.S. dollar is holding pretty steady over the 2025-2026 timeline here. The euro actually had points where it dropped very similar to the level of the US dollar. So that will be interesting. If the US dollar kind of stays where it's at or even rises in value, and the euro goes down and the US dollar becomes the biggest within the Forex race, that should mean a lot when it comes to the power of the US dollar in international trade. Here we go. What happened around the world? I've just underlined things that were half a percentage point or more. Mexico down 0.72 here. We have Norway down 0.75. Sweden up 0.50. Australia up 1.62. China down 0.73. Hong Kong up 0.70. India down 1.44%. Japan up 2.53%. Singapore up almost a full percent. South Korea, look at those guys, up 3.55%. It says here that on the year to date, they're over 100% growth. So if you know anything about the South Korean markets, please put in the comments what the heck is going on there. Taiwan up here as well, 2.51%. Now it's time to assess your silver and gold, as I just put in an order to APMEX. By the way, if you would like to support this channel and buy silver and gold at the same time, and APMEX is a place you're considering, I have an affiliate link. It looks like this. It's a QR code you can scan, or you can use the link in the comments below, and that will set you up to where you buy metals, and at no cost they pay me for sending you to them to do that. Not pushing you to do it, but if it's something you're already considering, hey, go ahead and check that out. All right, so what did we see this week in silver? It looks like silver landed at $76.03, which is a decline of $2.01, or roughly 2.58%. Not all is lost, though. As you can see, year to date, it's still up $3.75 an ounce, or 5.19% on the year. Gold, on the other hand, a little bit different. They're at $4,555.40, down almost $20, or 0.42 on the week. But as you can see, year to date, very similar. We're at 5.1%. So the movement between gold and silver has been on the macro scale since January, fairly parallel, though there's been weeks where one has done better than the other. They've kind of traded off. That's what we have for you today. Thank you so much for watching, and as always, please remember to stay classy and current with the culture of currency.